Now, Kganyago and his colleagues have cut South Africa's growth forecast for 2023 from 0.8% to 0.6%. This while leaving its forecast for this year unchanged at 1.2%. Meanwhile, Bank of America seems a bit more upbeat on the country's prospects, penciling in growth of 1.5% for 2024. That's as it expects load shedding to ease and consumers to experience relief when central banks start cutting rates. Joining me now with further insight is Bank of America's Global Research's Sub-Saharan Africa Economist, Tatonga Rusike. Thank you so much for your time, Tatonga. Of course, we can't talk about the outlook for this year without referencing last year. And I mean, we started off 2023 on an upbeat note as growth came out higher than anticipated. But of course, things started we started seeing headwinds as we headed to the year end. And of course, that's also maybe what we're seeing in the downward revision by the SARB of growth last year from 0.8 to 0.6%. What is your projection for 2023 growth, and does it include a technical recession?
No, not at all. We have no technical recession. I think, as you mentioned, that 2023, we started with some upside surprises, which was good because we had actually finished 2024 with a fourth quarter recession. And we're worried about a technical recession, but it never materialized. Now we had a contraction in the third quarter now, but it was really shallow, and we think that fourth quarter is likely going to be positive, but perhaps less than what the central bank is estimating. So for the full year, we're estimating about 0.5%. We think that also that the consumer is really weak. We saw contraction of consumption in both second and third quarters. So going into this year now, we think that there is some upside to growth. There was quite a lot of investment last year, particularly into renewables. And then Eskom also had power plants that were out that are now back on stream, particularly from Kusile. So it is a better outlook that traditionally South Africa should grow around 1.5%. As a starting point. If there are drags, then you can come down. But if there are more positive shocks, then it can be higher than there. So our starting point is really 1.5, but relatively speaking, 1.2, 1.5, it's neither here nor there. It's still very weak growth for a country that also grows population-wise around 1.5. So if we want stronger numbers, then we need to be seeing 2 to 3%, and we are still not yet there.
Well, I'm actually wondering, because you're talking about, some sort of relief that we could get in terms of local structural issues that we have struggled with for a long time, but also even globally with inflation now showing a trend of coming down. And I'm wondering, you talk about, of course, still weak growth, but could these things maybe provide a sufficient springboard for sustainable momentum going forward?
So, I mean, the good news from the global environment is that most central banks are starting to turn dovish. And we could see the US, the Fed, cutting rates as early as March. So that helps on the transmission to South Africa, that you could have the currency also appreciating. We have a forecast of 18 for year end for the rand. So much of that appreciation could come in the second half. So that transmission is also positive for inflation. And so we see domestic inflation also moderating. But we do think that the SARB is not going to rush into a cutting cycle. I think first half has got some setbacks. You've got an election coming up in May. The rand could be volatile depending with various election outcomes. So they're going perhaps to start in July relative to, let's say, markets are pricing an early start for May. And if today is something to go by, then don't hold your horse for early rate cuts as far as South Africa is concerned. So we do think that they'll start from July, and then you will have about 75 bips or so to year end in terms of cuts. So that's something positive that's coming from globally. But domestic, we are looking more at setbacks rather than positives.
Well, I mean, just talking about the SARB, we do know that the MPC members were for today's decision, but Lesetja Kganyago did announce the appointment of David Focus, as he was, of course, an advisor of the SARB, but now he is a member of the MPC. Do you expect any kind of significant impact on the direction of monetary policy there or not?
Not a change in the direction of monetary policy. I think SARB is a solid organization. Usually when somebody is appointed as an advisor to the governors, it's usually a stepping stone to be a voting member of the MPC. But what the governor also said is that when, rather than if, the president appoints another deputy governor to replace DG Naidu, I think you probably see the sub-members coming to 6. So that means we could eventually be seeing 7 members in the MPC. So it will have more members, which will strengthen decision making. But we are now coming at a time where we are pivoting towards cutting. So mantra policy is now becoming less exciting. So it is a good time to absorb all the transitions with new members. The governor himself has got his term of office that that is supposed to expire in November, right? So he's open to staying, but the determination is yet to be done by the president. So we could have some transitions, but they come at a time when mantra policy is now less exciting. If it was time around hiking, you would worry quite a bit. But I think the pivot now is probably good to consolidate. So it is good, I think. The SAB as an institution is very strong.
All right, let's quickly wrap up the conversation. You mentioned elections, and of course that could affect a lot of things. There's also the upcoming budget. Can Treasury put a lid on spending, considering the elections that are coming up, but also the bailout that Transnet needs at the moment?
Yeah, look, to give credit to National Treasury, election cycles have never really impacted fiscal in terms of fiscal blowouts that you perhaps see in other countries. So it's been prudent. I think what you have had is a build-up of expenditure pressures, given higher wage increases in social grants and all of those items. And they've done a lot of tax hikes over the years. So there isn't room for tax hikes. And also, given that it's an election year, we don't expect that they will be doing any potential tax hikes in this budget. So that's the positive. So they would likely keep the lead on containing expenditure by, adjusting within the budget items. But we do think that, look, Transnet is too big to fail. Yeah. It's inevitable that an allocation will be met to Transnet, but you have to put it in a context that Transnet is not Eskom in terms of the amounts that they require support. It is about less than half of what Eskom actually has. So it might be there on the budget, but it's not going to make as big a dent as Eskom would be.
All right. We have about a month to find out. Thank you so much for your time and for your insights on the outlook for South Africa's economic picture in 2024. That was Tatonga Rusike from Bank of America Global Research.